Hello guys, this is Nick from forexfornoobs.com with my midday analysis. If you enjoy this analysis, please hit the like button below and hit the subscribe button below to subscribe to my YouTube channel for more analysis, webinars, and awesome Forex education videos. Before I start, I want to tell you how my analysis works. Every Tuesday, Wednesday, and Thursday, I hold a live analysis session. In the analysis, I cover all the pairs I'm currently trading. This is usually 10 to 20 pairs, and I do multi-timeframe analysis on those pairs. Multi-timeframe analysis means that I look at every timeframe I have for each pair. I do not trade all of those timeframes though. I use them for analysis. The only timeframes I actually trade are the 3, 4, 6, 8, 12, and daily. The reason I do this is because price action is fluid. Price is always moving. If you look at a single time frame, you are seeing a single snapshot of price, and that can be misleading. By looking at a lot of different time frames, you get more snapshots, which gives you a much clearer idea of what price is doing right now. This also ensures that I rarely miss a trade setup. I do my multi-time frame analysis 2 to 4 times per day, so every 4 to 8 hours. This ensures that I see almost every candle forming, which makes it hard to miss a setup. I only post my analysis to YouTube once per day though, as I cannot record every time I do my analysis. You should remember, I do not find trade setups every time I do analysis. Trade setups are not always there when you want them to be. If I do not find a trade setup in the midday analysis, I might find one in the next analysis I do later in the afternoon or the evening. Trade setups aren't always there when you want them, and just because I'm doing analysis, it doesn't mean I'm going to find a setup. Also, if I do find a setup, remember that these are just potential setups. Not every setup I find is actually going to turn into a trade. Many of these setups will never trigger, or they'll just be cancelled. Just because I say that I'm considering entering a setup, it doesn't mean that the setup will actually trigger. But when they do trigger, I enter them, and I post the updates to my blog, which is linked to below. Finally, you may notice that I sometimes fast forward through parts of this analysis. I do this when I cannot find any setups on the pairs that I'm looking at. It saves you watching 5 minutes of me running through charts and saying there's no setup here. So I'll just fast forward through those boring parts. Anyway, enjoy the analysis. Today is Tuesday, the 1st of November 2016, and the time is 10:18 here in the UK. You're looking at a CAD JPY daily chart. Well, now it's a daily chart. You're looking at a CAD JPY daily chart. Let's get started with the analysis. Nothing much going on CAD JPY. We have already gone through this, but I had to restart this because my internet messed up. So we already know there's nothing on CAD JPY. Nor is there anything happening on AUD New Zealand, but we'll flick through it real quick anyway. Nice. Euro AUD. Nothing much happening on Euro CAD. This is like a continuation on Euro CAD, but it's not the kind of continuation I'd want to trade. If you guys haven't seen the new videos in the Forex Mastermind section, please do check them out. I discuss kind of continuation reversals in there. I'm going to expand a little bit on continuations beyond that and take a different type of continuation setup too, which I've already planned out and everything. But this is not that type, so let's just go on to AUD JPY. Now, AUD JPY, we have something interesting happening here. Well, it's not really that interesting. I mean, it's just your classic kind of counter trend reversal setup that's forming right now. On the daily chart, it's not that visible, but if we go down to the 12-hour chart, we're already seeing signs of indecision forming, and we can also see that on the lower time frames. So we can see on the 6-hour chart also. So price came up, right? Came up to here, tried to get through this resistance area, fell back down a little bit, then the next candle. Basically for the last 2 to 3 hours, it's been stalled here. So the fact that it's been stalled here for the last 2 to 3 hours, that indicates to us that sellers are really fighting back against buyers. So the scales are tipping towards the seller side. The fact that this current 6-hour candle has not been able to make a new high beyond the previous candle, that also is a good indication that sellers are really taking control of price. So what I want to see here on, let's check out the 4 hour real quick. Yeah, 4 hours doing something similar. It's not very visible on the 8 hour. This is why we do multi-time frame analysis. You know, on the 8 hour, if you were limiting yourself to just the 8 hour, there goes my internet again. Anyway, so yeah, if you're limiting yourself to just the 8 hour, you're not always going to see all these things. So let's say you're limiting yourself to 8 hour and daily for whatever reason, because a lot of people ask me, they say, Nick, I just want to trade 1 or 2 time frames. So should I be trading the 8 hour and the daily? Should I be trading the 4 hour and the daily? Whatever it is. If you limit yourself to too few time frames, you're not going to see everything. You're not going to see everything. You're going to miss a lot. So let's say you've decided to do 8 hour and daily, because those are 2 of the best time frames, really. You'd look at this and you'd be like, oh yeah, price is slowing down, but we're not quite getting any indecision. You'd look at the 8 hour, yeah, price is slowing down, we're not getting any indecision. But that doesn't show you what's really happening in this area. By looking at multiple time frames, you get a much clearer picture of what's going on. So looking at multiple time frames is, very, very important. So by looking at multiple time frames, right now we're seeing on the 6 hour price is stalling. On the 12 hour, we're getting some pretty nice indecision there. This 12 hour candle has got 10 hours and 30 minutes until it closes. So it's very likely that what we're seeing right now is going to be way different by the time it closes. I mean, obviously over the next 10 hours, it could spike up to here, it could spike down to there. You could get like a body like that. Oh, not like that because it opened there, but you get what I mean. Well, I guess you could technically get it like that. But anyway, my point is, over the next 12 hours, this candle could change a lot. So while I'm always tempted to wait for the higher time frame to close, this is looking really nice on the 6 hour also. So I am going to monitor this on both the 6 hour and the 12 hour. If the close isn't that great on the 6 hour, I'll probably go to the 12 hour, but I am tempted to, if it closes as is in the next 4.5 hours, because this 6 hour candle closes in 4.5 hours. If it closes as is, I'm going to possibly enter this trade on the 6 hour. I'll keep you guys updated. So let's actually look at the details of this potential trade setup. So this isn't a trade setup because the candle hasn't closed. It's a potential trade setup. So based on what we're seeing right now, based on the current shape of the unclosed candle, I'd probably want to take this something like that. It has a very good risk to reward ratio currently. But keep in mind, like I said, the candle hasn't closed. So usually in the early signs of indecision, when you see indecision forming and you start planning a potential trade, you get a very good risk to reward ratio because the candle hasn't closed. But by the time the candle closes, a lot of the times it's going to spike up higher, so you need to extend your stop loss, or it's going to spike down lower, you need to make your entry a bit lower. But as it stands now, we have a pretty good risk to reward ratio on this one. We have depending where you want your stop, I'd probably place it somewhere around here, to be fair. You could have up to a 2.5 risk to reward ratio. So why is my target down here? My target is down here because of the simple rule I use. Whenever you're planning to enter a trade, you look to the left. Looking to the left, what does that show us? It shows us, bam, bounces there. Shows us bounces through there. A lot of bounces through there. This is obviously a problem area. And if AUD JPY gets down to here, it's very possibly going to stall like it did there, like it did here. So I'd want to close out this trade at this point. Now, a lot of people ask me, Nick, when you set a target at 2.54, then you're always going to have that risk reward ratio of around about 2. Why do you say that sometimes you get out with a 3 or a 4 risk to reward ratio? Well, the answer is simple. This is the target I have for my automated exit. But if I am around, so if I'm not in bed, if I have time, if I'm at my computer or on my phone, when price gets down to here, when price gets down to here, roughly there. If I'm around, I'll remove my automatic exit and I'll see what happens. If price has fallen fast, and if it's not really stalling in this area, then I'll just leave it open and I'll let it run a little bit. And then I might exit down there, or I might exit down here, or I might even, if it's moving fast enough, exit down there. So, you know, if you're around and you're seeing some nice momentum and sellers are clearly in control of price, you could always extend your target. When I say this is my target here, that's for my automatic exits. That's when I set an automatic exit, and then price is, then I get out if I'm asleep or if I'm just away from my computer, if I can't get to my phone. A handy little trick that you guys might not know is setting alarms, okay? So let's say my target is here, right? I set an automatic exit here. Now I'm gonna set an alarm up here. There's not a specific amount of pips. This is just done completely visually. So I set my alarm just a little bit above, you know, a little bit above that target. And if my alarm rings, then I know that price is getting close to hitting my target. Then I can come back and I can decide what I'm going to do. So be sure to use alarms if you can with this trade, or if you're not going to be around, be sure to use alarms. Does that make sense to everyone? Does everyone understand what I want to do with this potential setup? Why I want to do it? Any questions? All right, cool. Now, I've decided to kind of give a warning. Well, not a warning, just explain a little bit before when I say a potential trade setup, because a lot of people get confused. I know you guys here in this room right now, I know you guys get it because you've gone through the course, but for everyone out there on YouTube, when I say a potential trade setup, I don't mean that this is going to actually 100% going to turn into a trade. I don't mean I'm going to enter now. I'm going to enter if this candle closes similar to what it is now. So my entry is only going to happen if after this candle closes. So we're looking at least 4.5 hours, probably longer, because you're not going to get it breaking this low as soon as the candle closes. So you're looking at 4.5, 5, 6 hours, something like that, possibly even more. And right now prices, see how it's pushing up a little bit. So this could extend that high up, and it could, let's say the high of this candle extends up to here, right? Then that means, because I want to get my stop loss beyond the most recent high, my stop loss has to be up there. So that's going to extend my stop loss to the point where my risk to reward ratio becomes 1.4, which is not really acceptable for me. That's too low of a risk to reward ratio for me. So if this trade, and if this potential setup ends up looking like this, I won't trade it. So potential setup doesn't mean a for sure 100% thing. We're gonna have to wait and see what happens when it closes. All right. Euro JPY, it's in between two support resistance areas, so we're not really gonna see anything here. Euro USD, Marin, are you here? No, you're not. Unless you've got a different name in this room. Marin from the forum. No, it doesn't look like it. I think Marin posted that he is still in this trade, right? He's still in the Euro USD long. All right, it doesn't matter. I'll post this to the forum too, but for anyone who's still in this Euro USD long from last week, I didn't enter this one, but to anyone who's still in it, buyers have clearly just made a new high, and it looks like they're in control of price. So I would say if you're holding, do pull your stop loss up and keep on holding, because it looks like this one is going to start running up a little bit more. So yeah, if you're still holding on to this trade, this is not the time to exit. This is definitely the time to hold. But if you're not in on Euro USD, there's not that much point in entering right now, based on my analysis. AUD USD, what's that doing? Sitting on resistance, that's good. Right, AUD USD is actually somewhat interesting. I mean, it is pushing up. It is continuing to push up. So this might not end up being a potential trade at all. We just have to wait and see. But it is somewhat, we are seeing some signs of it stalling or slowing down at this resistance area. So do keep a close eye on AUD USD. There might be potentially a trade forming in the next 5-6 hours, or maybe the next 12 hours or so. Just keep a close eye on that. New Zealand USD between two support resistance areas. Yeah, nothing much happening. Go on to the next pair. New Zealand CAD approaching resistance, but it's not on top of resistance, and it's not a pair that I trade much anyway, so not gonna bother that much. USD CAD, that's a bit late. Probably wouldn't want to enter this anyway, to be honest. It's a bit messy. But it's clear that USD CAD is it's hitting a pretty heavy resistance area. But this is too messy, way too messy. USD CHF. Anyone still in the USD CHF short that I mentioned in last week's analysis? Again, I didn't enter this one because it slightly broke my rules. It's like when I have very, very strict rules as to the entries for my trades and as to the stop losses, risk reward ratio type rules, but not everyone who's trading my strategy has those same rules. A lot of people have are less strict, let's say, less risk averse. So for me, a trade that's too risky might not be too risky for you, so it's completely fine for you to take it. Just because I'm not taking the trade, it doesn't mean you shouldn't take the trade. Everyone has to make their own decision with each specific trade. Oh, sorry, Maria, I didn't see what you'd said. Anyway, USD CHF, there's nothing much going on. If you're still in the short, do hold the short. If not, there's not really much going on for any new trades. Let's go back to Euro USD to answer your question, Maria. Okay, so you're asking, is this the end of that overall downtrend that we saw on the daily? It could very well be. I mean, you know, as always, trends have to end. They have to end at some point, and this could be the end of that trend. It is a pretty big retrace right now. It has really, really turned around, and it turned around from a very significant low. I mean, this low here is hugely significant. It's a low that it came down to here last time, and it just went up ever since. I mean, it did spike down there, but that's bound to happen. So this was in February 2016, which is, yeah, it's getting almost a year away, almost a year ago, I mean. So this was a significant low, and it's bounced from that low again, and yeah, it doesn't look like it's going to stop anytime soon. I wouldn't necessarily say that the downtrend is dead, but there is potential that it is very possible that the downtrend is dead. It's making some new significant highs. It's really reacted from that low. If you're still in this trade, you should definitely hold it. This could be a big one. This could be a trade that you ride all the way up to here. You know, a lot of people ask me, do you ever regret not entering a trade? And my answer is almost always no. You know, I find that it's counterproductive to regret your decisions. If you decide not to enter, you've decided not to enter. And you've done so because you're following your plan, so you can't regret those decisions. But even though 90% of the time it's no, I do kind of regret not entering this one, because this one was borderline for me. It was really borderline. It was like, I could have entered, but it was just a little bit too risky, just that little bit. And I said to myself, okay, I'm not going to take that risk. But I honestly do kind of regret not entering this one. But to those of you still in it, good work, like really good work. Keep on holding. This one does have some very good potential. I would just tighten the stop loss, because I'm not saying it can't turn back. Obviously it can turn back. Obviously it can keep going down. You know, we've seen 100 times trends like this where it's trending down, it pops back up for a bit, then it continues down. You know, but even though it can, we do have strong potential for it to continue moving up. So do hold on to this position and do pull up your stop loss just in case it does turn around, so you get out with some profit. Anyway, what were we up to? We did USD CAD, we did USD CHF, USD JPY maybe. There's nothing going on there though. Yeah, we're down to the GBP pairs, and I'm not really that interested in these pairs, to be honest. I'm not wanting to trade GBP at the moment. So let's just skip analysis on those pairs, because I'm not going to take any trades. Even if there's an amazing setup, I'm not going to take a trade on GBP right now. Hey guys, thanks for watching this video. If you like this video, then give it a thumbs up below. If you have any questions regarding this video, then leave a comment below and I'll respond to it. And don't forget to subscribe to my channel to get notified as soon as I upload my videos. My Facebook and Twitter are in the description below. Thanks again for watching, and happy trading.